Hi, everyone, this is the Encyclopedia channel, and I ask you a question. What is money laundering? There is too much money of unknown origin in this world, but do you know why you want to launder money? How do criminals launder money? Why do we say we should avoid money laundering? Money laundering is the process of passing funds from illicit activities through a series of complex transactions and maneuvers to make it appear that they came from legitimate sources. In this way, the true source of the funds can be concealed, and the tracking and investigation by legal agencies can be avoided. The purpose of money laundering is to transform illegal proceeds into legal assets, so that they can be used for legal activities such as buying property and investing, while also avoiding taxation, supervision, and other legal restrictions. In addition, money laundering may also involve various professions such as financial institutions, law firms, accounting firms, and real estate agents, who assist clients in money laundering activities through their professional knowledge and skills. Money laundering not only poses a threat to the economic and financial system, but also causes social injustice and damages public interests. Therefore, governments and international organizations have been taking measures to combat money laundering, curb the occurrence of money laundering activities, and maintain financial and social stability. So, what methods do criminals use to launder money and turn illegal funds into legal funds? Money laundering is a very complex and high-risk activity, and money launderers usually need to use various means to conceal the true source of funds. The more common methods of money laundering are as follows. Cash transactions. This is one of the easiest methods of money laundering. Criminals deposit cash into bank accounts and then spread those funds across multiple bank accounts to disguise their origin. This cash is then transferred in small transactions, such as buying jewelry, art, investing in high-value goods such as movies, for legitimate gains. The advantage of this method is that it is easy to operate and does not require any third parties. Credit card money laundering. This is a method of using credit cards to launder money. Criminals use fake credit cards or stolen credit card numbers to make purchases, then resell the purchases to others at below market prices in order to launder money. The advantage of this method is that it is fast, but it needs the help of other people to achieve the purpose of money laundering. False transactions. This method is usually used to disguise the source of illegal funds through false transactions. Criminals transfer illicit funds to a fake business account, and then transfer those funds again to other business accounts. These businesses are often owned or controlled by criminals or their accomplices. A bogus transaction is usually conducted by one or more bogus businesses in which the exchange of goods or services does not actually take place. The purpose of fake transactions is to funnel money and make it look like proceeds from legitimate businesses. Escrow money laundering. This method usually involves criminals depositing illegal funds in a bank and asking the bank to invest these funds in certain assets. The advantage of this method is that the process of money laundering is more concealed, and criminals can obtain benefits through the assets they hold. Bank custody money laundering can also be carried out through fund accounts opened by banks, so that investors can indirectly launder money by purchasing the fund. Tax avoidance of money laundering. This is a method of evading taxes, usually by criminals transferring funds to an offshore company or bank account to avoid paying domestic taxes. This method usually requires the help of offshore financial centers or other unregulated financial institutions, because these institutions usually have lower tax rates and looser financial regulatory regimes, making it easier for money launderers to hide their illicit sources of funds. Virtual currency money laundering. With the popularity of virtual currency, money launderers have also begun to use this new payment method to carry out money laundering activities. Virtual currencies are generally unregulated, and transactions do not require identification and bank account information, making them easy to use for illicit transactions and money laundering. Money launderers can transact in virtual currencies and then convert them into real money in order to disguise the origin of their funds. Money laundering of virtual assets. Virtual assets are digital assets, including cryptocurrencies, electronic wallets and electronic payment systems, and online virtual commodities. Unlike virtual currencies, virtual assets are usually used for non-monetary digital assets, such as virtual real estate and virtual items. Money launderers can use virtual assets to conduct transactions and convert them into real money to disguise the origin of their funds. Property investment money laundering. Money launderers can launder money by purchasing real estate or other high-value assets. The advantage of this method is that the yield is high, and more cash flow can be obtained through leasing or selling. Money launderers often use false purchase contracts, appraisals, and loan documents to disguise the source of their funds. You see, money launderers use more and more methods, which are more and more complex and covert, making it difficult for regulators to detect and crack down on them. Therefore, banks and other financial institutions are still continuously improving their ability and technology to prevent money laundering in order to prevent money laundering from happening. At the same time, the government and regulatory agencies are also strengthening the supervision and crackdown on money laundering activities in order to maintain the normal order of the financial market and social fairness and justice. I don't know if you have heard of these three most famous money laundering cases in the world. The first money laundering case, Bernard Madoff's Ponzi scheme. Bernard Madoff is a well-known American financier and investment consultant. He was exposed in 2008 for allegedly conducting a Ponzi scheme. Under the guise of creating a high-yield investment fund, he attracted a lot of investors' money, but in fact he didn't make any real investments. Instead, he created a seemingly sustainable investment opportunity by using new investor money to pay early investors back. But when the economic crisis hit, more and more investors began to redeem their investments, which made Madoff's scam completely unraveled. Bernard Madoff's scheme involved billions of dollars and is considered one of the largest Ponzi schemes of all time. His actions seriously undermined the credibility and stability of the financial market and brought huge losses to investors and financial institutions. He was eventually sentenced to 150 years in prison and ordered to pay tens of billions of dollars in damages. Second money laundering case, the Panama Papers leak. The Panama Papers leak was a massive data breach that first came to light in 2016. The documents, which include classified documents from Panamanian law firm Mossack Fonseca, reveal how politicians, billionaires, celebrities, and corporate executives around the world use offshore companies and secret accounts to hide wealth and evade taxes. The behavior of the leaked documents, which contained reams of bank transaction records, emails, and company documents, revealed a variety of money laundering methods, including anonymous transactions through offshore companies, hiding dirty money in nominally legitimate investments, involving a large number of false loans and related party transactions, etc. The document leaks sparked widespread attention and investigations around the world, leading to the resignation of some political leaders and the bankruptcy of companies. The third money laundering case, Wall Street money laundering case. The Wall Street money laundering case refers to the 2009 U.S. Department of Justice investigation of HSBC. HSBC is accused of assisting Mexican drug lords, terrorists, and other criminals to transfer large amounts of black money to the U.S. financial market through money laundering. The findings showed that HSBC had serious money laundering problems involving billions of dollars over the past few years. HSBC is accused of violating U.S. anti-money laundering regulations by failing to report suspicious transactions in a timely manner and even facilitating suspicious transactions. HSBC was fined $1.91 billion, one of the largest fines in U.S. history. In addition, HSBC was also required to improve its anti-money laundering measures and strengthen supervision and internal controls to prevent similar problems from happening again. The Wall Street money laundering case revealed the money laundering problems of large financial institutions and sparked extensive discussions on the regulation of the financial industry. The case also took a toll on HSBC's reputation, forcing it to take tougher anti-money laundering measures to restore public trust. These three cases demonstrate the seriousness and complexity of money laundering. Money laundering not only undermines the stability and credibility of financial markets, but can also lead to financing of terrorism, drug trafficking, and other criminal activities. Therefore, governments and financial institutions of various countries have adopted stricter supervision and measures to prevent and combat money laundering. These measures include strengthening supervision and law enforcement, enhancing anti-money laundering awareness and training, establishing more effective anti-money laundering systems and technologies, and improving public awareness of and preventive measures against money laundering risks. Only through global cooperation and efforts can we effectively combat money laundering and maintain the stability and fairness of the financial market. Since money laundering is a serious crime, what are the penalties for money laundering in major countries in the world? Penalties for money laundering vary from country to country, but generally include criminal sanctions, fines, asset freezing and confiscation, regulatory measures, and other means. This article will introduce in detail the punishment measures for money laundering in major countries in the world. U.S. The United States has always been the leader in the global fight against money laundering, and its measures to combat and punish money laundering are very strict and effective. The anti-money laundering laws and regulations in the United States mainly include the Bank Secrecy Act, the United States Money Laundering Containment Act, and the Anti-Money Laundering Act of Overseas Private Banks and International Financial Institutions. For money laundering, the main punishments adopted by the United States include imprisonment, fines, asset freezing, and confiscation of property, as well as effective and extensive regulatory measures. European Union. EU member states have also adopted a series of measures to combat and punish money laundering. The EU's punitive measures for money laundering are mainly composed of the EU's anti-money laundering directives and the anti-money laundering regulations of each member state. The EU Anti-Money Laundering Directive imposes minimum standard requirements on EU member states, and each member state can also adopt stricter measures according to its own situation. Penalties for money laundering in the EU include imprisonment, fines, asset freezing, and confiscation of property. China. China's punishment measures for money laundering are also improving day by day. China's crackdown on money laundering mainly includes laws and regulations such as the Anti-Money Laundering Law of the People's Republic of China and the Criminal Law of the People's Republic of China. For money laundering, China's main penalties include prosecution and imprisonment, fines, asset freezing and confiscation of property, and other regulatory measures. UK. As one of the European financial centres, the UK has also been committed to combating money laundering. The UK's punitive measures for money laundering mainly include laws and regulations such as the UK Anti-Money Laundering Act and the Prevention of Terrorist Financing Act. Britain's crackdown on money laundering mainly includes penalties such as imprisonment, fines, asset freezing and confiscation of property, as well as stricter regulatory measures. Countries around the world are increasingly cracking down on money laundering. These punitive measures have played a positive role in combating money laundering. However, due to the complexity and concealment of money laundering, combating money laundering is still difficult and challenging. So how can ordinary people avoid falling into money laundering crimes? Money laundering is an illegal act that endangers society, but ordinary people may sometimes unintentionally participate in it. So ordinary people need to strengthen self-protection and risk awareness to avoid falling into money laundering crimes. First of all, ordinary people should understand the concept and means of money laundering and increase their awareness and vigilance against money laundering. Understanding money laundering techniques can better identify suspicious transactions and reduce the possibility of being exploited. At the same time, ordinary people should also understand anti-money laundering laws and regulations, abide by relevant regulations, and refrain from participating in illegal transactions. Second, ordinary people should strengthen the protection of personal information to prevent personal information from being used for illegal activities. When conducting online transactions, you should choose a formal and reliable platform. At the same time, ordinary people should also protect their personal bank accounts and passwords to avoid account fraud. Again, ordinary people should conduct due diligence when conducting large transactions to ensure the legality and authenticity of the transaction. When conducting large value transactions such as real estate and vehicles, you should obtain the identity information and transaction background of the seller from relevant agencies to ensure that the transaction is legal. Ordinary people should strengthen their awareness and vigilance against money laundering, understand anti-money laundering laws and regulations, strengthen personal information protection, conduct due diligence when conducting large-value transactions, and avoid suspicious transactions and behaviors. In order to avoid being trapped in it, avoid unnecessary trouble and loss for yourself. Have you learned the knowledge in the text? What do you think about money laundering? Welcome to leave a message in the comment area and discuss with everyone.